Morning, Paul Georgie from Allendale. It's March 26th, Monday morning, and grain markets have been volatile here overnight. Had quite a bit of movement, but as we open, corn, wheat about unchanged, beans strong again. As we head into this week's USDA quarterly stocks and planted perspective report on Friday, we're going to see a lot of choppiness here, I think, and a lot of quick moves in the market, and then we'll probably stabilize and not do much for a period of time. But that's what we're seeing here overnight. Led by the beans, the soybeans are sharply higher, 10 to 13 higher here in the overnight session, mainly because of continual lowering of the South American crop. Argentina's numbers and the Brazilian numbers, it seems like they get less and less on a daily basis as reports come out of those areas. So that's the thing that's providing the strength to the soybeans. They also are still continuing to have port problems. It's taken some time now that the truckers are back to work. It's taken some time to get the beans and get the ships moved through the major ports in Brazil and Argentina, and that is providing, again, support here to the U.S. in anticipation that China will come into the U.S. and buy more soybeans. And, it's possible during this period of time, but I think the thing we've got to watch out for is when South America gets their port systems in order, their soybeans will again be lower than our soybean values, and the world buyers will go there and buy soybeans instead of from the U.S. So we've still got a bit of time here before that happens, but as we move along here and probably into the first part of April is what we're hearing out of South America, that those port situations can be cleaned up by then. So we've also got this big report on Friday, and that is going to continue to be talked about here for the next 4 days. The report's on Friday morning at 7:30, quarterly stocks report. Trade estimates are bean stocks at about 1.3 billion, 700 million bushel, or 1.371 billion bushel. That's going to be more than last year, but a lot less than what was certainly anticipated because of some of this export demand that we've seen here over the last several months. Corn exports expecting to be tighter than last year. Corn 6.162 billion bushel is the average. Last year it came out at the March number was 6.523 billion bushel. So tight stocks in corn. In the old crop, that's why we're seeing some support in the old crop. But when you go and look at the new crop corn compared to old crop, we're seeing pressure there, as weather conditions have certainly been ideal. We've got a little spell of cooler temperatures now, more seasonable. However, we've gotten some moisture throughout the Midwest, and then expect it to dry off for a few days. Pretty much an ideal situation for planting here, and likely to plant more corn because of the early possibilities of getting corn in the ground. So that's supporting the soybeans and the new crop beans. Meanwhile, putting pressure on new crop corn. The planted acreage numbers that are coming out this Friday morning by USDA, that will be a big number and likely cause some extreme volatility after that report. So we suggest make sure you get positioned in a way that you can control your risk. Maybe use some options, or certainly talk to Allendale's staff here, and we'll be happy to help you out and try to get you positioned in order to minimize some of that volatility that's potentially going to happen here after this report. There is some talk in Europe again. The EU is waking up again about the reality that there some risk. Spain now is being talked about as some high risk areas. Their cost of money has increased, and that is being starting to create some chatter, and providing some weakness to the euro and some strength to the dollar here this morning. In the livestock trade, we had the cattle on feed report on Friday. That was neutral to slightly bearish. The trade's estimates were on feed at 102.3, came out at 103. The place number, 102.7, was the trade estimate. It came out at 103. And marketed, 99.5 was the trade estimate, came out at 98. And that's probably the most bearish number of the group, as there was an extra day, and yet we still didn't get enough, didn't get more cattle slaughtered than a year ago, and that's because of the poor margins, the lack of able to move this product through the retail channels. And on Friday afternoon, the USDA put the choice beef down 151, select down 110, just continuing the pressure to beef, trying to find a value that the consumer will buy the beef. I was in the store this weekend and started looking at the cost of some of these steaks and so forth, and can certainly see the reasons why there is some reluctance by consumers to go out and buy this high-priced cuts. The cost of gasoline, also another factor that is having a direct impact on consumer spending and the demand for pork and beef at the retail counter. So on Friday, we've seen livestock futures sell off sharply, possibly an exhaustion sell-off here. We'll have to see how the market reacts here this morning. But many times after a report, you kind of fade the report. So if we open lower, don't be surprised to see some buyers step up here, especially after those sharply lower trades that we've seen on Friday. Stay in touch with Allendale's research, and also want to remind you that we've got the Allendale Planning Special for the Allendale Research Center, only $99 for 6 months. Check into the website there, and you can get information on it, or just call us. We'll be happy to help you get signed up for it. And we wish everybody a very successful trading day, and I'll talk to you tomorrow morning. Thank you.